Ever see a company that just seems to, well, defy gravity, posting these truly incredible growth numbers?
Yeah, it happens.
Well, today we're doing a deep dive into exactly that. Eli Lilly and Company, ticker LLY. It's a pharma giant going through this massive transformation.
Right.
And our mission is to really dissect what's driving this hyper growth and, maybe more importantly for you, figure out if that premium valuation is, actually justified.
It's a great case study because Lilly, I mean, they're right at the forefront. A huge market shift. We're talking hundreds of billions of dollars here.
Wow.
And it's largely down to one specific class of drugs, really changing how we tackle some major health conditions.
Okay, so let's jump right in then. Lilly's recent growth
Yeah.
has just been phenomenal. What do you see as the single biggest engine behind that right now?
Oh, hands down. It's their GLP-1 franchise.
Yeah.
You've got Mounjaro. What was it? $3.5 billion in Q4 2024.
$1.5 billion, yeah. And Zepbound.
Zepbound, too, the newer one, pulled in, amazingly, $1.9 billion in that same quarter. And what's really key here is the clinical data. Zepbound showing better weight loss against competitors in trials like SURMOUNT-5. It's compelling stuff.
That's just staggering revenue so quickly. But beyond just having good drugs, what stands out about their strategy?
Well, this is where it gets really interesting. It's not just the drugs, it's the strategic genius behind their manufacturing investments.
Ah, manufacturing piece.
Exactly. They've put over $50 billion into this since 2020. $50 billion.
Okay.
And this isn't just, trying to keep up with demand. They're building a real competitive advantage, a moat.
A durable one.
A very durable one. They're aiming to deliver, I think, 60% more doses of these incretin medicines that includes the GLP-1s in the first half of 25 compared to 24.
60% more.
Yeah. So they basically corner the supply chain, makes it super tough for rivals to catch up fast. It secures their lead.
So the GLP-1 story is massive. But, what seems really smart about Lilly is they're not just banking on today's winners. They're already building the next thing, right? Future-proofing.
Absolutely. They are definitely not resting. You look beyond GLP-1s. There's Kisunla, donanemab for Alzheimer's.
Right, the Alzheimer's drug. FDA approved July 24.
Correct. And they just got a safer dosing schedule approved July 25. Plus, they're securing the future of GLP-1 too.
How so?
With their oral candidate, or forglipron. Phase 3 results are due June 2025.
An oral version. That's potentially huge.
It is, and it's that strategy. Some call it preemptive self-cannibalization. Develop your own next-gen drug to control the market, even if it eats into your current sales a bit.
Smart. Control your own destiny.
Exactly. And then there's the M&A activity, buying companies like Verve for gene editing, SiteOne for non-opioid pain, Scorpion in oncology.
Building completely new pillars.
Totally. It shows real foresight beyond just GLP-1s.
Okay, with all this innovation, this strategy, the big question turns to the money. How does this amazing growth actually look on the bottom line?
Oh, the financials are, well, stellar. Revenue surged 45% year over year in Q4 24, hit $13.53 billion.
45% growth?
And their guidance for 2025, stunning. $58 to $61 billion.
Wow. And profitability with all that investment.
Still incredibly strong. Gross margin was 82.2% in Q4 24.
82%? That's
Wow.
really high for pharma.
It really is. Speaks volumes about their pricing power, their efficiency, and they're returning value to shareholders too. Dividends.
Right, the dividends.
11 straight years of growth, a 15% compound annual growth rate over the last 5 years. Next payment's $1.50, September 10th, 2025.
Okay, so that brings us to the point many listeners are probably thinking about. What does this all mean for you as an investor? Let's hit that elephant in the room, the valuation, that PE ratio, 62 to 66 times trailing earnings. The industry average is like, what, 23.6x?
Yeah, around there.
So is it just plain overvalued?
Well, it's nuanced, isn't it?
Yeah.
Yes, trailing PE is high, but you look forward, the forward PE is more like 30, 35x.
Okay, still high, but better.
And the PEG ratio, price earnings to growth, is around 0.94 to 1.12. That suggests it's maybe fairly valued to just slightly overvalued.
Because the expectation is they'll grow into it.
Exactly. With earnings projected to grow over, say, 22% per year, the market's pricing in that future growth.
Makes sense. But even with this great story, there are always risks. What should investors keep an eye on?
Definitely. Key risks. Well, intense competition is number one. Novo Nordisk, obviously.
Right, the big rival.
Regulatory pressure, like the IRA, the Inflation Reduction Act, that's always a factor in pharma. Then there's the patent cliff looming for Trulicity in 2027.
Patent expiration. Generics could hit sales hard then.
Could do. And finally, just execution risk. Expectations are sky high. They have to deliver.
So how do we quantify that risk?
If you look at metrics, the 5-year beta is low, 0.40, suggests less volatility than the market.
Okay, that's good.
And the Sharpe ratio, measuring risk-adjusted return, is 1.51, which is superior.
Also good.
But despite those numbers, the overall risk rating is probably medium, simply because of those very high forward-looking expectations. They need to execute perfectly.
Medium risk. Got it. And yet, the market seems pretty convinced. Wall Street consensus.
Overwhelmingly positive. Strong buy. About 83% of analysts say buy or strong buy. Average price target, $950 to $1,015.
And lots of big players are investing.
Oh, yeah. Institutional ownership is incredibly high. 89%.
Wow.
But importantly, there is a counterpoint. You saw HSBC recently downgraded them to reduce target of $700.
Really highlights those valuation concerns.
It does. And we should touch on ESG, too. Lilly's got a medium risk rating from Sustainalytics, 23.4. For pharma, things like, patient access, drug pricing, these are big social factors. They matter for long-term value.
Good point. ESG is definitely part of the picture now.
So yeah, wrapping it all up, Lilly is this really unique blend. You get the stability, the scale of a giant large cap. But with the kind of hypergrowth you usually only see in like a cutting-edge biotech, they're using today's massive success to build really durable leadership for tomorrow.
So our bottom line, our actionable recommendation here is a BUY rating for Eli Lilly. We see a 12-month price target of, say, $975 to $1,025.
Yeah, seems reasonable given the growth trajectory.
But, and this is important for you listening, this stock is really for growth-oriented investors. You need a medium to long-term horizon. Think 3 years, maybe more.
Definitely not a short-term play given the valuation. And maybe a final thought to leave you with.
Go ahead.
What does Lilly's whole approach, this balance of dominating now while aggressively future-proofing through R&D, through M&A, what does that tell us about how pharma companies might need to operate to keep innovating and growing in this landscape? With all the competition and regulation, something to think about.